Okay guys, so in this video we are going to do accounting equation. Okay, so what you need to do guys is to make sure that you watch until the end so that you're gonna learn something you didn't know about accounting equation. So it's very simple. Okay, firstly guys, before we start with our question, I want to introduce this law that you need to know. Some of you do know it, some of you you don't. Okay guys, every time when you're writing accounting equation, make sure that you write down this sign. Okay, you must know that assets always increase on the debit and decrease on the credit. Owner's equity increase on the credit and decrease this side. Owner's equity and liability guys, just know that they have the same sign. It's minus plus. Assets is the one that is different with the other one. So this principle guys is saying that whenever that you find that your assets are going to be more, just debit the component. If you find that some of the assets are going to be outside the business, just credit. For example, if you find that your money is going down, okay, as a business your money is going down, money, we're talking about bank, okay, because here we're talking about business. Okay, so if money is going down, which means that the bank is going to make assets decrease on the credit side, which means that you're going to credit bank. And also guys, if you want to get total under this accounting equation, make sure that try to search and maybe to use your own textbook to list examples of assets, list example of owner's equity. Guys, under owner's equity we have the following. I want to write this down because it is important. We have capital, we have drawings, we have something like all expenses, all income, all income that you get from income statement and expense that you get from income statement, they fall under owner's equity. The only difference is that expense, obvious guys, expense is an expense, it's a minus, it comes this side. Income increase the value of the business, owner's equity. Okay, so that's what you need to know. And under liability guys, know that we have something like creditors control, which is the same as payable. Liability guys is when we owe someone. Okay, if we owe bank, for example, interest on overdraft, which means that is going to be here. On overdraft is going to be here. Okay, we also have something like loan under liability, but you must go and check other examples guys, they're going to help you. Now let's go to examples of assets. Assets guys, we have something like, we have equipment, we have equipment, we have vehicle, there's so many guys. Computer, we have inventory, which is trading stock, we have bank, which is more important, we have debtors, someone who owe us. Anything that controlled by business or anything that owned by business is an asset. Okay, there are so many, and some of them we're gonna do them when we deal with this activity. But guys, please go and check other examples so that when you face a transaction, you will know that, oh, this transaction is all about equipment, which means that there is assets here. Now the last question will be, is this equipment going in or out? If it's going in, this side, going out, this side. Once you identify that guys, I'm telling you, this thing is total. You're going to get total here with no excuse. Now let's do our activity and see if we can be able to do it with this principle and with some of these examples. Some of them I will list them when we face them. Okay, transaction number 1. The owner took goods with the selling price of 9,500 for his wife's birthday party. Okay, and the markup of these goods was 25% on the cost price. Guys, in accounting, if we didn't sell something, don't record that item using selling price. Use the cost price. Selling price is only when we sold. But here, guys, we didn't sell anything. The owner took goods. It's a withdrawal because he's going to use it for his wife's birthday. Wife birthday, guys, is a personal use. It's not a business things. So which means that there is a drawings here. Drawings always decrease owner's equity. It will never be plus. Okay. So which means that drawings, we already find that drawings is going to be debited. Drawings. Okay. Sorry about that. Now we left with credit. Guys, in accounting, once you debit, the rest you credit. Now, because we already debit, we left with credit. Now the question is, what was withdrawn? Is it cash, or is an inventory, or is it equipment? The owner took goods. That's the inventory, guys, which means that inventory, which is an asset. Okay, let me list it here. Inventory is an asset. Okay, we are going to credit. Why? Because this was taken outside, we no longer have it, it's out. Inventory. When you debit or when you credit every time, guys, make sure that you have a reason why you are doing so. Okay, now it's fine, you have 2 marks for this. But how about amount? Remember I said that because we didn't sell, we can't use the selling price of 9,500, but they give us a markup to convert it into cost. What do? Very simple. 9,500 multiplied by a markup you said 100 over is always 100 plus markup that you are given. 100 plus 25, which is going to give us 125. Okay, then it will give you a amount of 7,600. 7,600. Okay, now guys, if you still remember this inventory, we said it's credit because it's an asset, which means that under assets, just go and write this sign minus. Drawings, which we take it here, we said it's always negative, go and do minus. This side it will be nothing because liability was not affected. Okay, now we can go to number 2. Goods sold. Now we sell, which means that we have to record a selling price as well. Goods sold for cash as per cash register tape is 11,000 and the cost price is 8,300, and they highlight that we must do 2 entry. We must indicate the selling price and we have to indicate that the inventory we no longer have it as well. So now this is what we need to do. Goods sold for cash, which means that bank increase because we receive money when we sell. When bank increase, we're gonna have bank here on the debit because assets increase on the debit. Why this increase? Is because we sold. Sales, credit sales. Why credit sales? Credit sales is income. If you check under your income statement, you will find it as a positive, not as negative. It's an income, it's a plus. Cost of sales is the one which is negative and it must be debited. Okay, very simple. The amount is 11,000. It's gonna be plus. This side is unchanged. Remember they said that we must do 2 entries. The second entry, guys, is to indicate that inventory is gone. I get a customer come and buy. Inventory is gone, which means that inventory, because it's asset, it must be credited. Inventory, and this is called cost of sales. Expense is negative, it must be debited. Cost of sales, no need to calculate markup here because it was given 8,300 like this, and it's a minus unchanged. Very simple, guys. Very simple. Every transaction, when you debit and when you credit, make sure that it has what? It has cents. Okay, so it's very simple. Okay, now let's go to number 3. A stationery bought for 1,250 on credit was in error posted in the trading stock account. Correct the error. Okay, this one is kind of difficult because here we bought on credit. We already credit that we bought something on credit, which means that liability here, it doesn't have a problem, because the only problem is that this was posted in the trading stock, and this is not trading stock. It's a what? It's a stationary, which means that under trading stock we must go and subtract. We must go and subtract. Trading inventory. Inventory must be credited. Inventory must be credited to indicate that we are cancelling the error that they did. Okay, and we debit what? Now we increase our stationery, because stationery is the one that was bought. Now we are recording when you add this side. When you minus this side, you are showing that it was not inventory. That's why you remove it and you put it this side. Okay, it's gonna be plus minus here. It's possible to have two accounts in the same account. Then the amount is gonna be 1,250. 1,250, just like that. Very simple stuff, guys. So guys, for those who want to attend extra class, just know that from now on we have extra class by only 100 rand per month, from grade 8 up to grade 12, and we also have an extra class for N4, N5, and N6. Those who want to learn financial accounting, come and join, guys, by only 100 rand, so that you can make accounting more fashionable when you get a good marks. Okay, because accounting is not too difficult, but it just needs someone that is going to most simplify for you, so that even when you go and write, you will never have any problem. Okay, now the next one. An account of Nyambo say who owe 3,000 must be charged with interest at 12% per annum, and it has been outstanding for 4 months. Okay, guys, here this person owe us 3,000, and he didn't pay what? He didn't pay this amount. Now we have to charge this person interest. Interest expense is going to do what? To increase his account, which means that his liability now is going to be more. Again, we are not the one that owe them. He is the one that owe us, which means that on our side is interest income. Interest income must be credited. Interest income, and his debtors control account is going to increase. Debtors control, guys, is an asset, a debt. It's going to increase. Why increase? Because again now he's going to pay us more, which means that we have more value when it comes to this data. Okay, interest income is an income, is a plus. Very simple. Now the question is, how much are we going to record? You have to say amount of 3,000 multiplied by 12%, and after that, remember this is annually. Then you have to divide the answer by 12, and after that you will multiply the answer that you got here by 4, because they said it's 4 months. Let me calculate quickly so that we can proceed. 3,000 multiplied by 12%, okay, and we get annually. We divide by 12 and we multiply by 4 months. Okay, so we're gonna get amount of 120. Remember, interest is a plus, and the debtors control, it was a plus, and change this side. Very simple. Okay, then the last one, the equipment bought on credit from Mungu Desto for 6,900 was returned since it was damaged. A debit note of 67 was issued. We bought equipment and now we return it to our creditor. Okay guys, if you have been watching so far guys, I hope you learned something so far. Please guys, let's subscribe, let's make this channel grow. We want to reach 100,000 subscribers by the year end. So it's only possible if you guys you are supporting this educational channel by subscribing, so that we can also keep recording more videos for those who are struggling to join extra classes. So please guys, let's subscribe so that this channel can reach that 100,000 subscribers by year end. Okay, now guys, the last one, remember we return equipment. If we return equipment, our liability must go down. We can't pay something that we return, which means that creditors control will come this side, creditors control will come this side. What do we return? Our asset is gone, is out. This equipment is out by this side, credit equipment. We return it because we no longer need it, because it is damaged, and amount is 6,900. Asset is out, liability is decreased. That's how we do accounting equation. So just let me know guys, where are you attending your school and the province that you are at. Just please make sure that you comment so that I will know where my viewers are coming from. I hope you learn and you enjoy. See you on the next one.